Hi everyone, this is Robert with AnnuityCampus.com, the annuity experts. Today's video discussion is going to be about indexed universal life insurance. I just did another video on this and I thought it'd be good to follow up with this a little bit more in more detail. You're probably watching a bunch of videos on YouTube or you're looking around because some broker is showing you this. Here's a nice thing. With whole life and indexed universal life insurance policies, they are permanent policies. So as they build cash value, that cash value is worth something on the street, okay? It's like having equity in your house, but you're not going to lose your value because both whole life and indexed universal life policies, they're not tied to the market. Now the indexed universal life, they might have a cap of the S&P up to 12% with a minimum every year between 1 and 3%. So no matter what, you're going to make money. With a whole life policy, they give you dividends. That could be anywhere from 3 to 5% as well. So it's kind of apples and oranges, but the real difference is, well, some of the same similarities occur where the money accrues tax-free. So as you make money every year, you're not paying taxes on that money. Similar to a Roth IRA or 401k. But here's the difference between insurance products and IRAs and 401ks. If you pull the money out, you will not be taxed. So you pull the money out, you will not be taxed because there's a policy loan, okay? Maybe it's 1 or 4%, but that's better than paying taxes on that money. The nice thing about these products is you can pull them out before you're 59 and a half without a penalty. I know a lot of doctors and physicians and business owners that take the money out, purchase a home, buy cars in cash, pay off school loans for their kids, okay? And that's where they get the money from. And you can't do that with an IRA, 401k, or anything like that because you'll be taxed by the government with an early penalty charge of at least 10%. And that's some of the benefits and features. A lot of people use these for retirement planning. You know, they used to do 401ks and IRAs. Instead of paying all these fees and dealing with market fluctuations, they just redirect those funds into these products, which obviously are guaranteed, they're safe, and they give you a potential upside. And the problem with this is this. The problem with the programs are this. If you go through a captive insurance agent, which means a guy that works for a company, an insurance company, they only sell one product, okay? And you also need to make sure that you overfund these properly, although otherwise you're just paying for the insurance, which is the death benefit, okay? So if you're going to do $200 a month, you might want to rethink this thing because these things they cost more money. So if you put $400, $500, $600 a month in or more, I have some people doing $20,000 plus a year into these, your gains are going to be substantial. Okay, so even if you're in the top 1% of income earners, these are really great because you're not being taxed on that money, and when you pull it out, you're not taxed either. Okay, for the working people out there, no one's ever shown you this stuff. You just sign up for the 401k at work. You get a $50 a month IRA, but you don't really understand how those are actually hurting you when there's something else out there that you could do that's going to benefit you better down the road, okay? And that's what we're in the business of doing. So make sure you do, if you don't do business with us, call a broker that could shop around and find an insurance company that will best fit your needs in a plan. Not just one company that works, they have a manager and the manager's like, you got to make your numbers. They're not going to. They might not set these up properly just because they want to get some cash flow into the company, so the manager stays off their back. If you go with the broker, they can find a program that'll work with you. I'm just telling you because I see it all the time. If you'd like to do business with us, hey, look, I'd like to have the opportunity. Okay, and there it is. In addition to that, go to AnnuityCampus.com, scroll down, and get signed up with the Annuity and Retirement newsletter. And again, thank you very much for your time today, folks. Bye-bye now.